GKFX Cambodia presents the week ahead. Hi everyone. I made this video to help you prepare for the week ahead in Forex, stocks and commodity markets. I've got 3 top things for you to watch this week, but, and yes, I know that this is becoming a bit of a habit, let's start with a riddle. Where does success come before work? The dictionary. I figured that was a bit motivational for you guys too. Remember, you can't get the profits without putting in the hours first. If you like that, please click the like button. It really helps us spread the word about these videos. First, let's preview the economic calendar and then I'll go through my top 3 highlights for the week. So remember, this is a shortened week for the US markets, which are closed on Friday because it's Independence Day weekend. So German CPI is expected to hold steady in June at 0.5%. US pending home sales cratered in April, so let's see if we get a rebound in May. There are 2 China manufacturing PMIs to watch this week, the MBS on Tuesday and then the Caixin on Wednesday. Tuesday, Fed Chair Powell and US Treasury Secretary Mnuchin testified to Congress. On Wednesday, US ADP is expected to show 3.5 million private US jobs were created in June, followed by the FOMC minutes. On Thursday, we have NFP a day earlier than usual, and the latest version of Eurozone June PMIs on Friday. So the first of my top 3 things to watch is, of course, the testimony from America's 2 economic superheroes, Jerome Powell and Steve Mnuchin. They will both appear before the US House of Representatives Financial Services Committee to talk about coronavirus response. In very simple terms, markets want to hear the Fed chair reiterate that monetary stimulus is here to stay, and for the Treasury Secretary to keep hope alive that a second US stimulus package is coming. And the sooner and the bigger, the better. If they deliver, that should be a positive force for risk assets including stocks, metals, oil, and currencies like the Aussie and the pound. Next is not so much a data point, but a comment on the rising coronavirus cases. The way I'm looking at it is that it takes 2 things for the rising cases to be important for the financial markets. The first is that rising cases have a direct economic impact via another full lockdown or travel restrictions. It was the 14-day quarantine put in place by New York, New Jersey and Connecticut for people travelling from US states with high infection rates that caused a big wobble in markets last week. The second thing is that the economic data needs to start getting worse, because that is the evidence that the economic recovery is going to be harder and longer than currently expected. For the moment, economic data is rebounding, even surprising on the upside. Last but not least is of course non-farm payrolls. This is a case in point about economic data surprising to the top side. There was a delayed reaction, but I think the shock American job gains in May go a long way to explain the resiliency of the S&P 500. Another positive surprise this week can keep the rally in shares going and keep havens like the dollar depressed. A disappointment could bring about that bigger market correction that many have been waiting for. Right, thanks everyone, good luck trading and make sure to subscribe to our channel so you don't miss the next video.